off to the races here at the New York Stock Exchange. Stocks officially open for trade, and we do see a mixed market. We've seen some rotation into these economically sensitive sectors of late. Small caps and gold have benefited. Joining me now with more on the markets is Hank Smith. He's Director and Head of Investment Strategy at Haverford Trust. Hank, it's great to have you on the show this morning. And with markets at these levels, what's your take?
Yeah, so look, I think it's very constructive that the overall market's holding up pretty well as we've had a fairly significant sell-off in a handful of the big tech mega cap names that have had very significant drawdowns, like Microsoft, for example. But what we're seeing is a broadening out, and that actually started to occur in the middle of the fourth quarter in 25. With healthcare stocks, and now it's broadened out to energy, materials, even some consumer staple and food stocks have done very well. So if you look at the equal weighted S&P 500, it is very much outperforming the market cap weighted S&P 500. And we think this is a healthy development because you just can't have the Mag 7 or the top 10, whatever you want to call it, drive a 500 stock index indefinitely. The laws of math don't work for that.
I'm glad you pointed that out, Hank. Just talking about the resiliency, the strength with the breadth of this market. I want to ask about volatility, though, because certainly the stock market has seen volatility in the precious metal space of late that has had an impact on equities. And I did have a guest join the show earlier saying that he does anticipate volatility throughout this year, even though that underlying foundation is there based on what you're saying. How do you anticipate volatility could factor in?
Well, I actually heard that interview, Kristen, and I agree with him that it would be very unusual to have 4 consecutive years of double-digit returns for the S&P 500. So we're probably due for a pullback of some kind. And also the second year of a 4-year presidential term is decidedly the weakest year. And here we are in the second year. But let's not forget, corrections are a normal part of any bull market. And they've got to be viewed constructively and very healthy for a bull market. They tend to flush out excesses and speculation, and we certainly have seen that in gold and silver as an example, which have become a momentum trade. There might have been 15 months ago some fundamental reasons to buy gold, but the last 5 or 6 months, it's really been an asset that has been going up, and that has attracted the momentum buyers. And I would be aware of any chart that has that kind of parabolic slope to it as gold and silver do.
We are going to get more big cap tech earnings throughout this week, and AI does remain in focus. Hank, how critical is AI spending to the stock reaction for these results?
Well, look, anytime you have an emerging technology such as AI today or 30 years ago, the internet, you are going to have some volatility in returns, even though the fundamental story is a pretty strong story. And we agree that we're in the early innings of this, everything to do with AI. We're certainly not in the latter part of the innings. But volatility in the stock prices is something to accept, and also will create a lot of buying opportunities in our opinion. And so some of the big pullbacks we've seen, I mentioned Microsoft a minute ago, we think is a buying opportunity. And one of the key differentials between today and, let's say, the late 1990s is you do not have valuations as a big headwind. I mean, Microsoft, NVIDIA, Meta, these sell at under 25 times next year's earnings. That is not a challenging valuation given the earnings power, the moat around their business, the cash generation, the exceptionally strong balance sheets. So maybe not in the next quarter, but ultimately for long-term investors, this creates an opportunity to either add to positions or initiate positions.
Hank Smith, Director and Head of Investment Strategy at Haverford Trust. Hank, thank you so much for joining us this morning.